So today I wanted to give another finance tip and talk about homeowners exemption and what that is. Basically what a homeowners exemption is the ability to pay no tax on the sale of your primary residence. And those dollar amounts vary based on a lot of situations, which I will get into. And at the end of the video, I want to talk about how to use this potentially for even greater master plan to avoid and defer capital gains in real estate. So stay tuned for that. Okay, so the homeowner's exemption for anyone who has a primary residence, let's use an average person with a $250,000 condo. They buy it, it appreciates to $300,000. And in that example, you have a $50,000 gain. If a person is single, they sell it, they don't have to pay tax on that $50,000 in gains because the homeowner's exemption applies to an individual that's owned the home for 2 out of the last 5 years and made it their primary residence. That exemption covers $250,000 of gains. So another example, let's say you bought a house for $250,000 and it appreciated to $600,000 and you sold it. Well, now you have a $400,000 gain and you have to pay taxes on a lot of that gain. $250,000 would be covered. The rest would be taxable to you. Okay. So that's a single person. Now a married person, they double that. So a married couple, they buy a house for $250,000. It appreciates to $750,000 and you have a $500,000 gain, you pay no tax because the homeowner's exemption for a married couple that follows all the rules and is allowed to use the exemption is granted a $500,000 tax deferred or tax-free gain on your primary exemption. So there are some nuances in this. The major ones being if you're divorced, if you've moved out of it, if you've transitioned into a nursing home. There's a lot of different nuances, and there's also some with separated couples and widows, and couples that have partially lived in there for less than 2 years. You can start getting partial exemption. So that's beyond the scope of this video. I wanted to just give you a little color on the exemption in itself. And now for the last little bit, I wanted to talk about a master strategy for this. So another video I could talk about in the future and to go into more detail, but it's a 1031. And so what happens is people who have rental, like let's use a normal person that you buy your first starter home and then you move out to a bigger home and you rent out your existing condo. Well, that turns into a rental property and you lose your ability to when you sell to get the homeowner's exemption because you no longer are using it as your primary residence. It's now a rental. So that's a big issue. If your place appreciated a ton, you do not sell it, you turn it into a rental, well, now you've lost your ability to claim the homeowner's exemption. However, if you do something creative, let's talk through this. You can use your rental condo and you can 1031 into another property for the future and you can put it into another rental. And let's say that rental is someplace you might want to live. Let's say you on the ocean somewhere and you're in retirement age or you think you can move somewhere in a different town later on. If you successfully could transfer the equity ownership from your first condo into another place, you put a renter in it, so it continues to be a rental, but you decide to live in it as your primary residence after that, well, you've now created a situation where you've deferred capital gains into the new place and you're now living in it. Let's just assume you're with a spouse, a partner, and now you have $500,000 of gains to use. So the homeowner's exemption is interesting on a lot of different levels. On an individual who has it and just sells their first condo or their first house, a married couple that has a nice house in Florida that's appreciated a ton, or if you've messed up a little bit and you've turned your other property, your first property, into a rental, and now you need to get rid of the gain somehow, you can find ways to move into your rental using the exemption. And I think I'll leave it there. So comment with any questions, reach out to me. Just another tax tip of the day.